What's up, guys? Welcome back to the Market Interest, where we talk stocks, finance, and the markets. It's been a crazy year so far, but what I want to do is go over the 3 top stocks on my buy list for February 2022. So the top 3 that I really think are good buys at this point in time in February 2022. We know the markets are going all over the place, guys, and if you're not watching it, then you know it's obvious. But if we take a peek at what's been going on in the S&P 500 so far, really, energy is crushing it. They're the only sector of them and financials that are doing well. So we have financials down here in the left corner. Energy's sneaking behind me. They are knocking it out of the park. Everywhere else, though, it's like a bloodbath out there, guys. Everything else is red. Everything else is negative. So there's a lot of volatility that's going on. A lot of opportunities for people to take advantage of. And I think now is the time to start making some moves and, acting wisely, thinking before you invest. But now some good opportunities for you guys to start making some moves. So let's dive into this. Let's see if we can find a couple companies that could be good buys for you. The top 3 that I have on my list right now, starting with Deneos Corporation. Guys, this is a shipping company. They move containers from one side of the world to another, from one country to another. Really boring, but their financials are set up in such a way where I think it's really, really strong, really good opportunity. Now, you guys are seeing that return correct. That's almost 180% for over the 1 year period, which is awesome. Awesome. And so far, year to date, so, a month, they're up 30%. Up 30%. So serious returns here, guys. Serious returns. They've had some really fantastic performance over the last year, and we got to congratulate them on that. This is going to be considered one of those value companies, a company that's undervalued, in my opinion, and based on their multiples, clearly some opportunity for them to really pop. If you're interested in other value companies, don't forget to check out the other videos that I have. But let's dive into this. Deneos Corporation. They move shipping containers from one country to another. We jump over their website. They are one of the world's largest independent owners of container ships. That's, again, it's boring. It's pretty boring, but every single one of us needs container ships moving from one place to another. If we're ordering stuff on Amazon, guess what? It's not all made here in the U.S. It is coming from China. It's coming from other countries as well. So this is the company that's going to be moving products back and forth. If we circle back and look at their market cap, got a market cap of about $2 billion. Not a massive, gigantic company, but billion-dollar corporation here. If we're looking at their earnings per share, about $25. That's that's about a quarter of their stock price. Stock price of less than $100 right now. I'd say that's pretty solid value. Looking at their price to earnings, their forward multiples, it's under 4, guys. Under 4. I've said it a million times. The average forward PE is between 16 to 17. So if you're seeing a company that's landing way below that, it's got to be for a reason, all right? Is it because their earnings is really bad, or is it because their stock price is so low, it's undervalued? In this case, I believe that it's because the company is undervalued. They have strong financials everywhere. Their revenue is going through the roof. Let's take a peek at their revenue real quick. Their revenue is skyrocketed compared to other years. Just taking a peek at the chart here. Most recent on the left-hand side, really big pop just in past 2020, in 2021. Let's see, gross profit. And here we go, net income, over $1 billion, guys, over $1 billion. So that's solid. That's not bad, right? It's not bad. Huge increase from prior years. So they're doing solid. Let's take a peek at their balance sheet. They have about $130 million in cash and equivalents. All right, so they've got liquidity there. They've got enough room to move. I believe that they just took over, just had an acquisition recently as well. So they're making moves. One thing I think is fantastic is recently they decided to pay a higher dividend. If we take a peek at their transcripts here from just a couple days ago. Here it is. We have Randy Javians, I can't pronounce the last name. Randy. We have Randy from Jefferies said, congrats on a great year. You wisely use the capital, some timely acquisitions. You clearly have a very strong balance sheet, cash balance, substantial cash flow visibility now, which those are strong words coming from an analyst, guys. So with that, how was the new dividend amount decided? And it's a 50% increase, which is meaningful. That is extremely meaningful for anybody, especially, somebody collecting income off that. The CEO, John Kostas, I believe it's pronounced. Sorry if I'm mispronouncing that. He said that he believes that the 50% dividend increase is pretty significant. He agrees with that. And that's really giving us the ability to further grow our dividend. Now, no offense to the doctor, those words should be taken with caution, in my personal opinion, and I could be completely wrong here, but just taken with caution. The reason companies pay out a dividend typically is because they don't have other projects necessarily right in front of them to use that capital and produce a higher return. So for him to say that it's really giving them the ability, going forward to further their dividend, to increase their dividend, it's something that I would be a little cautious with. I wouldn't expect it, but nonetheless, you've got to give the guy credit. He's run a great company, great operations. They've been running it very efficiently. They have a lot of cash on hand. So one of those companies where I'm very, very bullish on, and I think they've got plenty of room to grow from here. Let's just take a peek at their profitability measures. Their gross profit margin, 80%, when the sector median is at 29%. That's awesome. And really the hot spot right here, most important for me, guys, is taking a peek at their net income margin, 152% compared to the sector median at 6.5%. So they're knocking it out of the park. They're doing great. That goes over number one. Again, Deneos Corporation, they're a value stock. If you want to check out more value stocks, just click the link up there in the corner, take you over, and you can review all the other value stocks. So let's move on to the next company. This one is going to be a growth company, and we all know this company, Facebook, or Meta Platforms now. So we all know that Facebook has been getting beat up this year, really beat up. If you bought it January, beginning of January, you're down over 31%. So it's getting beat up bad, guys, real bad. Yeah, just looking at their stock price over this past month. So this huge dive really just happened this past month. People get nervous when they see such a big dip in that period of time. So I completely understand when investors don't want to jump on an opportunity like this, but this happens with Facebook every couple of years anyways. And if you guys are looking at Facebook and truly investing in this company in the long term, then you're seeing opportunities here. That's why I have this as number 2 in my top 3 stocks to buy in February 2020. I think this is a good position for a longer term investor. I'm buying more into it. My clients are buying into it as well. I think this is a fair price where they are right now, just based on clear multiples, price to earnings. A handful of companies up here. These are the peers to Facebook. Facebook's got the lowest price to earnings multiple out there, and by a lot, right? By a lot. And that's really important. So I think they're an underpriced growth company, at least for the time being. Now, they do have some struggles. Facebook is one of those companies, like Facebook is the company everyone loves to hate. It doesn't matter if you're, what party you're with, Democrat, Republican, Independent, or, if you're just a hippie crunchy or a tech wizard. Everybody hates Facebook, we all use it, but they all hate it. Nonetheless, they've got a huge user base. I think it was almost 3 million. There's like almost 3 billion, 2.8 billion users, I believe. And so they've got a lot of power there. They've got a lot of influence. The thing I like about them is they have a longer term game plan, at least with the metaverse and everything else. It's a very interesting concept. They have some competitors. I think there's going to be some competition for them, but nonetheless, there's a longer term game plan, which I do like. But their profitability can't be ignored, and that's why I like them. I don't think that they're going to be going away anytime soon. Meta is here to stay. Facebook is here to stay. This is one of those companies where they're delivering so much cash that they have time to make some tweaks to their business plan to capture on some other opportunities. So their gross profit margins, 80%, over 80%. Net income margin, 33% compared to sector median of 7%. So they're super, super valuable here in terms of how much cash they're generating, how much cash they have on hand. So total cash, short-term investments, Was that 47? Was that going to be million, billion? Millions. All right. So yeah, they've got a lot of cash on hand. They've got a lot of cash. $47 billion. Let's say 48 billion in cash in short-term investments. So there's a lot of liquidity here. If they need to make moves, they can. Any other acquisitions, of course, they always have troubles, I shouldn't say always. There's always some issues when bigger companies, scooping up the smaller ones. But they have a lot of cash on hand. They can weather the storms. So just based on their peers alone, and where, growth companies are, again, Meta, Facebook, this is a growth company. Their multiples aren't going to be the same as a value company. The way that they deliver cash or generate cash is typically different. Their multiples in terms of earnings, their price to earnings multiples aren't the same as a value company. So I can understand where they are, and based, compared to their peers, Facebook is really like more of like a value growth company right now. They're the most undervalued out of the growth companies that I'm following right now. So I think that they're in a prime spot to actually, take advantage of this price. I don't think that they've hit the bottom. I think we are really, really close to it though. Like really close to it. I just bought more of their stock last week. When I look at a company that lost, how much was it? They're down 31% in just like a month and a week or so. 31%. I think about what Warren Buffett has said, be fearful when people are greedy and be greedy when people are fearful. And when a company loses 31% in a month, people are running, they're scared. They don't know what to do. They don't want to touch this with a 10-foot pole. Perfect. Prime time for smart investors to look at the fundamentals, see how the company's working, and see if it matches a good piece of your portfolio. All right, guys. Number 3 on the list here is Alpha and Omega Semiconductor Limited. Semiconductors, guys, we all know semiconductors, the chips, huge shortage right now. Huge shortage. I feel like that's been one of the biggest stories since the pandemic is hey, chips can't be made. What's happening with this? They're used in cell phones. They're used in cars, computers, pumps, all types of stuff that you wouldn't even think of. They're used all the time. Pretty much any electronic, they're being used. So this company here, market cap of under $1.5 billion. So a little bit smaller compared to, your typical NVIDIA. Through the roof, guys. NVIDIA's through the roof. Love that company. 1 year return, looking at 68%, which is solid. Year to date, they're down 5.5%. So not bad compared to the other, growth stocks or smaller other semiconductors. If we take a peek at their website, you can see the different products that they're in. Washing machines, I didn't know, refrigerators, power supplies, electric vehicles, obviously, and all types of vehicles, not even just electric vehicles, but all types of vehicles have it. Computers, TVs. They have a spot on their website here where they can, give investors more financial information about their upcoming report. It's an unaudited report, just as an FYI. But you see here that their revenue was up about 3.5%. Their GAAP operating income, you guys know I like operations. That one was up as well, another few million. So it's good. It's just another place to find more information and get some more details. Now, my play with this company is that they are a smaller semiconductor company, right? So a lot of these big, like NVIDIA, like a massive company, I own them, I'm keeping them, I'm holding them still. Some of these larger companies, you can't buy in at such a large price, or you can't get as many shares. And I know it's not about the shares and necessarily the share price. It's about the percentage return, right? We all know that. But with a company like this, I can see that they can continue to improve their operations. They can continue to grow as a company and maybe branch into other areas, or potentially be bought out by one of these other, larger companies. So I'm more thinking about a longer term game plan than just having one massive company like NVIDIA that's, they're the elephant in the room. I'm trying to look for some other opportunities that could have a really good pop to them. And just looking at where they are, they have good profitability. Let's jump over to the profitability measures real quick. Just looking at their margins. their gross profit margin, so it's low, right, compared to their peers. So this is where I actually get excited, guys, because typically, I like to see where their margins are, and I like to have good gross profit margin as well as net income margin. I'm actually excited because the gross profit margin isn't, the best it could be, is because if you take a look at their net income margin, it dominates compared to the sector. It dominates. They're at 61 compared to 6.5 for the sector median. So they're dominating on their net income margin. If they can improve their gross profit margins, so I'm not sure what they need to do. Whether it's their sales team or how they're managing their staff, or what, if it's somewhere in the operations, or just generating more revenue and finding some other efficiencies. I'm not exactly sure, but if they can improve this area up here, then guys, that's going to trickle down to the bottom line. Their net income is they're going to still have a substantial net income margin, which that's where I feel like we can actually benefit in the longer term. So I think it's a little bit more of a longer term gameplay with these guys. I'm not looking for a huge turnaround within a short period of time, but I think that, hey, they're in a sector, the semiconductor semiconductor business, really needed. There aren't enough jobs or companies that are out there making this stuff right now. Huge demand, very high demand for these semiconductors, and they're in that field. They've got a great net income margin. They're a smaller company, and potentially have some opportunities to branch out into some other fields. So I think it's a good play in the long term. Take a peek at their ratings, guys. They're ranked number 1 in the industry from Seeking Alpha, their quant ranking. Number 1 in the sector overall, and then number 9 overall. So that's out of 4,200 stocks. So very strong quant rating. Like I was saying before, guys, if you're not making moves during these times when the market has volatility, you're going to be missing out on some opportunities here. Alpha and Omega, if you take a peek at their last 5-day return, let's take a peek here. Over a 5-day period, they're up 18%. 18%. So you've got to be making some moves. They definitely took a dip within that period of time. So if we take, scroll back over a month period, they were down. If you bought them a month ago, you're still down about 0.5%. But if you're looking for opportunities, you're really trying to seek alpha, you're looking for the next opportunity, and putting some fundamentals in front of you versus just emotions about being tied to one stock or one area of the market, you're going to find some opportunities like this where you can take advantage of them and be up 15% in a week. I'll say it's not something that happens often. It's not something that that's guaranteed to happen consistently, but we're in one of those volatile times in the market where it's possible. It is possible. It takes some luck for sure. It takes a lot of research, a lot of time to do the research, and some ability to have that foresight. But hey, within a 5-day period, look at right here, up 24%, and over a month period, only up 5%. But in a 5-day period, up over 23%. So that's good news right there. So those are my top 3 buys, top 3 stocks on my buy list for February 2022. Again, these stocks aren't right for everybody. It's something where you have to really be, investing wisely. Think before you're putting your money to work somewhere. Talk to a financial advisor. But for me, these are stocks where I'm actually taking and executing on them. I think there's too much opportunity with it where I don't want to, leave it behind. Again, there are risks in each and every one of these stocks, whether it's, just assessing your risk tolerance. I can't, stress that enough. You should definitely understand how much risk you're willing to take and how much volatility you're comfortable with prior to doing any type of investing. So make sure that you're doing that before you're diving into the markets. But again, there's some great places where you can take advantage of this. If you guys are interested in learning more about investing in value stocks or growth stocks, make sure you click one of these videos or click click one of these links at the end of the video here. And if you want to sit down and have a conversation or have a phone meeting about any of these stocks and think if they're appropriate for your portfolio or not, feel free to reach out. I have a link in the description below. Don't forget to like, share, subscribe to our channel. And if you want to join us for any conversations, jump on Facebook and join us there at the Market Interest on Facebook. All right, look forward to seeing you guys soon. Appreciate your time. Catch you soon.